Alrighty, guys, it is 3:30. Time to wrap it up for today. This Wednesday, April 30th, last trading day of April. And not sure what was going on here around the 2 o'clock hour, but that was a kind of a spike of anything. It's happened pretty freaking quick, and I had no news. I didn't know to which would cause that. So not quite sure what that was, but a nice pop on the market there, and then so yes, you see how it comes to balance, and then a rotation down, and then yes, kind of comes to balance again, and now we'll see where they're going to go. At this point, I would say if they can hold these support areas at 55.20s again, we're up above it. If they can hold this level, we are maybe going to start off range bound and keep the bias to the upside going into the overnight. But it could go either way. I mean, it's it's been one crazy day. So early on this morning, we took out support. I mean, the GDP number came out. It's a weak number. We started off range bound. We were looking for retest of the highs and see if they can take it higher. Looking to buy weakness down to that 55.20s. But you saw that they already after that 8:30 news, the GDP number came out as a contraction, and they started heading lower. Took out the 20s. Right, was down here at the 5500s, and then at the open, we just got a little bit of strength, and then just kept going lower. So they knocked out everything, including the lowest, the 54.80 low. And I was I was thinking that's the end of the short side. See how far you're going to take it. And I was expecting a lot worse of a day. I thought they were once they took out support, they were just going to head lower and just keep going. That's usually what happens when you get this pylon effect. But the personal income number came out, and that basically turned the market around. A good inflation read. They got it all the way down here to the 54.50s, and then started running it right back up again. And that was, look at that retracement. That's a one retracement and a half. And after they headed back up above that 55.20s, I think we were in pretty good shape. So 55.15 to 20s, that was your mean when they started trying to knock it down. A couple of retests of that mean, and then we haven't looked back since now. We'll see where it ends up closing. So if they hold above that 55.20s, start off on the long side of the market. But if they can't, if they close below it, we just start off range bound. So that's kind of the way I'm looking at it. If they take out this four-letter edge, 55.50 going into the afternoon, that may be a late in the day long trade at that point if they're going to start squeezing this up to that 75 level again. We'll see. Anyone's guess at right now where it's going to go? We just watched that 55.20s below that one. We start off range bound above it and going to lean long, looking to buy weakness down to that 20s. Again, the 5500 and the 54.95s here are the ones on the downside, which it changes the dynamic if they take those out. So that's where we are on the ES. Now, news going into tomorrow's trading. We got a little bit going on, a lot of news today, but tomorrow we had a job cut report at 7:30. At 8:30, we get jobless claims, PMI manufacturing at 9:45, ISM manufacturing at 10, and construction spending at 10. So that's what we got tomorrow, 8:30, 9:45, and 10. Then, of course, Friday, we have employment situation coming up. So we got some stuff going on ahead of us here. Looking at the NASDAQ and the bonds. Bond market first, just range band around that 116.20 to 116.30. And if you look at capital flow in the bond market, we are right here. We are not a little bit above that attractive 1606s. We're right in the middle between that 118 and the 116s. So right in the middle of this is like this high volume area right here. So as you can see, we have long-term low, the high volume areas at this 1726 to 118, 116 to 116.08. Then we have a smaller one here, prior distribution at 1716s. And right now we are trading pretty much right there. So 117, a little bit below it, but I would start off range bound on the bonds and see how far they can take it on either side. If it starts trading above that ledge, the ZB at 1705, I would lean in on the long side, and trade below 1616, I would lean in on the short side. So fairly straightforward, and see if they can retest these lows or run it up and retest the highs. But that was pretty crazy, and this is why Z period moved. That was the news. It started up at 1720, took it down to 16. That like almost $2,000 move on the bonds, and that's pretty crazy. That was a pretty good move. But starting off range bound, let's see where they're going to go from here. On the Nasdaq, also pretty good move to the upside. A massive sell-off in the morning. That was worse than worse and worse. So they went from the 19.5 down to the 19 and back up to the 19.5s again. And that's, well, they went down to, let me see, 19 ones, 19,100. So 400 down, 400 back up. So an 8 or 900 point swing on the NASDAQ today. That is crazy stuff. We are right back up again. So unless they close below this area, the 350s, 310 and 350 support areas, if they close below those two, we're going to start from the long side, see if they can reach the highs, potentially take this higher. So pretty good flush to the downside this morning on that news. And yeah, that had me going for a while. I was thinking like, oh boy, here we go. But this retracement, yes, it gives you a sense that there's buying going on. There's institutional buying kicks in on the dips, and they're being bought, and the market is driving it right back up again. And that's all about, I think, that they're going to be trade deals announced soon and tax packages moving along. All the stuff they've been talking about and hesitating about is starting to come together, at least what it looks like. It's not there yet, so you can't just kind of celebrate yet, but if that starts happening, I think the market's going to feel a lot better about the whole situation. Gold is right back up in this upper range. So range bound gold, look to sell strength. Look to buy weakness to get started. It's going to be one edge here at the 3308s. Going to be one here at the 3300s, and maybe one here at the 3295s. And on the way up, looking to get short against the 24s. There's going to be one here at the 29 to 30s and one here at the 34s for rotations back down. So range bound trading on gold at this point. Let's see where they're going to go on this one. Because the overnight moved pretty good yesterday, and again, complete reversal. We did call out this trade early on this morning. Look for them to take out this 98 to 3300 level, and then look for a potential retracement trade, and that developed actually pretty good. It was a little bit volatile at the time, so if getting on the trade was not by any means any easy feat, but if you did, it would have been a nice payout on it. And then oil, finally oil, they're down here building value at the 5,800 level. If they can take that out, we will be on our way lower. We're probably in a move out of the middle to the downside. If they can't and they start retracing, I think we're just heading back up towards that mean at 61. So let's see where they're going to go from oil. But starting off on the short side, looking to sell strength against the 5850s, 5875s up to the 59s. And I would say about 59, take off the short bias, go back range bound, look for retracement to the upside. So that's the way I'm looking at oil to get started in the overnight. Back to the ES, and pretty much kind of where we left it. So let's see if we get a strong close or what they're going to do. But if they can hold this line now, at least the 5520s, I think we're in good shape to move this higher, even with the scare we had here. So it's been one heck of a ride today. So no trades for me though. I have been stuck in some other stuff, and it's with this volatility, I've just not wanted to be aggressive about it, and it's just I just sat on the sidelines today. So all right, we'll leave it there, and I'll see you back in the morning for May 1st. Ready, guys, later.